Thank you. Again, I'm Sylvia Bowling, and I'll be your Ginnie Mae host today. I'm a business analyst in the Office of Security Operations at Ginnie Mae, and the team would like to welcome you to session 3 of Investor Reporting, the reporting and feedback system. Regarding call logistics, feel free to log your questions in the Q&A box as we go through the material. You'll be able to navigate to that at the bottom of your Zoom screen. We also plan to open the call for questions at appropriate intervals, and there'll definitely be time at the end of today's session for questions, and those questions can cover any of the 3 sessions. We also ask that you please do not post questions to chat, as the team cannot monitor this after the call, and if we needed to follow up with you on anything, it won't be accessible to us after the call. So please limit your questions to the Q&A box only. As usual, Brandon is going to be supporting us on the technology front. So if you have any Zoom or technical questions, feel free to direct message him and he should be able to help you. Brandon's also just posted the deck for today in case that's something that is useful to you. And again, if you have some issues accessing links, you can always navigate there directly by going to ginniemay.gov, and then you can select issuers, issuer training, tool and resources, and then navigate to single family training resources, and the 3 decks from the 3 sessions will be your top items in that folder. So we have a lot of good information to share, so I'm going to hand you over to our team of experts from VDev. They will introduce themselves and lead us through the material. And with that, Christy, kick us off, please.
Thank you so much, Sylvia. So today, Steve, Debbie, Melanie, and myself, Christy, will be facilitating today's session. So using the chat box, can you give me 2 things that you learned during yesterday's session? So what did you find valuable from yesterday?
I noticed you asked sneaky questions, Christy. Trick questions.
Oh, that is very true. Let's hear. That was, when do you summarize a loan? Absolutely. Okay. The I-19 has italicized wording. Very good. Absolutely. Always hit save and summarize and submit. Yeah. So the loan screen has the save button and the pool screen has the save and summarize button. Very good. Okay, so we will go ahead and move on. So yesterday we discussed how to edit and correct records, went over calculations performed by RFS, and noted which fields issuers are required to report. We covered exception feedback, navigation to different access points, and how to download files. We reviewed file submissions and if a file was accepted or rejected in RFS. We discussed PDS reporting, including when to start and stop loans, how to clear PDS exceptions, and how to complete the PDS monthly certification. In today's final session, we will focus on the 2 bolded modules on this slide. We have discussed common field review findings. Today, on slide 11, we will cover the second finding, and on slide 78, we will cover the sixth finding. We will get started with additional reporting requirements. In this module, we will review monthly and quarterly reporting requirements and explain the timeline for additional reporting requirements. Loan matching, sorry, forgot to change the slide. There we go. Loan matching and suspense should be worked monthly. The RFS monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. 11-714 remittance advice for Ginnie Mae 1 certificates should be reported no later than 7 p.m. Eastern Time on the 8th business day. Only a limited number of issuers actually report Ginnie Mae 1 11-714 information in RFS. CABS, SCRA, and WIFIT are reported quarterly. New pool data quality should be addressed monthly if you have any. I will now turn it over to Steve.
Thanks, Christy. Good afternoon, everyone. Now we're going to cover an additional reporting requirement called matching and suspense, loan matching and suspense. Loan matching, as you can see here, is an automated process occurring monthly that compares the issuer reported data, the loan data that is, to agency master data. Okay, so Ginnie Mae holds this in high regard, and it's a very important additional reporting requirement that you should follow on a monthly basis. Now you can see the agency data sets listed at the bottom of the screen that are included. This includes the FHA A43, SFIS, the CHUMS data, the VA guarantee data, and the RD endorsement data. Currently, NAPIH is not matched at this time. It may be in the future, but it's just the 3 agencies at this time. All right, next. This is your loan matching and suspense criteria. Okay, when we're talking about loan matching and suspense to the agency reported data, the fields are case number, field 5 in the L record, and when we talk about the case number, this is the agency case number within the 15-digit RFS reported case number. If you're looking for the specification of the case number, you can find that on APM 02-17. The other field is the OPB. This is field 10 on the RFS L record. Christy covered that in one of the previous days. And the OPB is the original principal balance per the mortgage note. Very important, especially with reperforming. The issuers must resolve non-matches. This is not an optional requirement. They must resolve non-matches, and these reports come out monthly. Christy mentioned earlier the review finding, and the review finding reference there, number 2, was that there are loan non-matches in your portfolio. And so if you want to avoid that field review finding, take care of your loan matches. All right, next. Now, when we talk about loan matching and suspense, we're navigating through MGM. Under Tools, you find MAS, which is matching and suspense, and you navigate to that. From there, next slide, you could see your, this is the matching and suspense module. Those gray bars at the top help you navigate through matching and suspense. And two of the things that you'll need for matching and suspense are the download, where you can see the different matching and suspense downloads that are available to you through MAS. The insurance match, terminate, suspense, age match, age terminated matching, the various suspense, and we'll get to attestation later. In addition, you could see the user guide link at the end of the gray row. This gives you access to the matching and suspense user guide, which is very helpful. Please download the user guide because it gives you a lot of good information about matching and suspense and what each of the reports and the downloads means. All right, next. All right, when we talk about insurance matching, these are the details for your insurance match. So we have insurance matching a few times during the month. Your downloads are available after the 5th business day. So this is after your loan reporting is complete. Those downloads are available to you. Then there's another match that occurs after the 10th business day, and again after the 25th calendar day. Okay, right before the close of the period. Okay, the matching and suspense in the user guide, section 7.2, talks a little bit about the types of insurance match codes that you'd see. We'll talk a little later about the match codes MC and NC. And we also, in that section 7.2, talk about age non-matching loans, which are detailed in APM 1801. Now, there are special conditions for if a loan has a curtailment, and for that, you can look at the details in the user guide as well as contact the help, the Ginnie Mae help at Deloitte.com for situations where your loan has had a curtailment and you're getting an insurance match code. Now, if the loan has been modified, then it would also be helpful to contact that Ginnie Mae help at Deloitte.com, and we're talking about loan purpose codes 3, 4, and 5. All right, next slide. All right, here are your MC and NC. Your MCs are matched on case only, and you'll verify the OPB. You can see these are listed in the download snippet that we have there, and the three loans that are two of the three loans that are listed there are MC loans. Okay, so you'll have a match code column, which will tell you what the match code is for the issue. The NC are they're not matched on case number. You must verify that case number and as well as the OPB. One thing, the note there, just confirm that that loan's insurance is active from the insuring agency. All right, next. So the NC and the MC relate to exceptions that you will see in PASF. Now, under loan activity, if you save your loan and you receive a MAT 001, it relates to an NC not matched on case number. If you received a MAT 002 in PASF, it's matched on case number only. Verify that the loan is actively insured. That would be an MC. Okay, so the matching and suspense as well as the PASF work in tandem to give you information on both. So it's just a notification in two different places. All right, next. All right. The manually hard-coded MC status loans. These include a number of different kind of special conditions. These are hard coding loans with a principal reduction, hard coding modified loans with principal reduction, the VA vet, non-vet, and Texas Land Board loans, and the construction to permanent loans. On these, the note here, the agency will not correct the data, and Ginnie Mae uses discretion on these loans. The process for these manually hard-coded MC loans, if you have a condition of any of those four at the top, it's best to contact Ginnie Mae Help at Deloitte.com to go through the process for manually hard-coding MC status loans. There aren't that many of those, so this is really a one-off situation. All right, next slide, please. All right, shown here is an example of a match, an MAS suspense download e-notification. When you have a matching and suspense exception, when there's a matching and suspense issue, you will receive an e-notification, and these will occur as they occur throughout the month. We mentioned the 5th, the 10th, and the 25th calendar day. So visit e-notification often to see if you're getting new suspense downloads for e-notification. In terms of reactions here, give me a thumbs up if you've seen this in e-notification. Okay, good. That indicates that you're reading your e-notifications, which is good. And and put in chat what you would do upon receiving this e-notification. Let me know how you would handle that. right. I'm not seeing any responses. Okay. Oh, here we go. Download the suspense list per the instructions, work on the items, respond to the email. That's right. That's right. So you've got your download, um, uh, your your download suspense items. You would pull those down and address those. Very good. All right. Um, let's move to the next slide. Okay. Now some e-notifications provide a link directly to the file. So the one we saw previously was just a notification that you had suspense items. There are, um, as in this example, a portfolio non-match e-notification, and it lists a PDF. That PDF has got information regarding your non-match, and you should address that when received. So check your e-notification. If there's a PDF for you to read, you would read it. Okay. Next one. Another example is this would be another example of an e-notification with a PDF link on there. Now you notice on this one the portfolio non-match action, and the action is in bold. Okay, requiring e-notification. Well, this indicates that you've received a non-match notification with instructions, and the items are still outstanding. Okay, so when you receive these action notifications, it means that you've got to address it immediately. Okay, you want to receive as few of the action notifications as possible, because it really means that you're delinquent in your non-match responses. The next slide. This is another example of a terminated loan matching action requiring e-notification. So there are different categories. Anytime you see that action, it means you should address that right away. You should address it initially, then you wouldn't receive the action e-notification. But when you receive the action e-notification, it means that you haven't responded to it yet, and you must respond to it immediately. All right. The next slide, please. There we go. Okay, so there are a lot of processes within matching and suspense, and so we provide you with this slide to show you which download files or letters will come out and on what schedule. So you see the schedule there in the first column, and now all of these processes you will receive an e-notification, and this is the schedule for the notifications that come out for each of the processes. So keep a hold of this one. This will kind of give you an idea of your workflow throughout the month in regard to matching and suspense. Okay. Next slide. There's a relatively new process within RFS called attestation. This is available in matching and suspense. And you'll access this via MGM and then to RFS, and then your matching and suspense module. So you can see here on the screen that there's a download available under downloads for attestation. And the purpose for attestation in general is that you are attesting to all of the matching and suspense items that you've addressed for the month. Okay. So let's go to the next slide. Okay. So you could see that there on number 3, if you have a loan that has been non-matched for 9 months or more, this falls into the attestation. Okay, this attestation is essentially for your delinquent loan matches that you have not addressed, and they're 9 months or more. Okay, the process to clear these attestations is you're presented a screen, and you would check the checkbox there for attesting to that loan on screen. And then as a completion to the process, there is verbiage at the bottom, which is your attestation statement that you must read and attest to. And then in order to kind of finalize that, there's a section at the bottom for providing information for your RSA Secure ID token. Now, these are folks that are on the 11702 signers for the issuer, and the soft token will allow you to attest to those loans. Now, these have to be, there's a process for comparing against what's in MAMS for the signer, the 11702, to make sure that you're actually a valid attester to these loans. So a picture's worth 1,000 words, so let's go to the next slide so you can see the attestation screen. So this is what it would look like. You could see here there are about 8 different loans. The first, third, and fifth have the attestation checkbox on the far right checked. You can see the attestation wording at the bottom and the area at the bottom to put in your RSA Secure ID. And finally, that gray box at the bottom right says attest. That would be the completion of your attestation process. All right, next slide. So this screen shows the process that I referred to in the previous slide. Ginny keeps an attestation log or an audit trail of each issuer's attestations. Okay. And finally, in the next slide, you can see that this would be slide 28 would show your attestation download. So once you download, these are the fields that you would see, including your signer user ID there at the end. Okay, so it shows all the loans that were attested to, and then you would be able to see this and keep it as an artifact as needed within your organization. So that completes matching to suspense and attestation. If we go to the next slide, all of what I covered, as well as additional loan matching and suspense information, is available to you in a webinar that you can view via the link here, which will take you to YouTube, where this 2021 webinar has been posted.
And Steve, before we leave the matching and suspense section, we do have a question in chat, and that is, how long do we get to respond to the unmatched warning email?
There are details within the PDF that you would download. So I think the question is on that action one. I believe you have 15 days to address the items there. And there are specific instructions within the PDF that tell you what you must do within those 15 days. That was a good question.
Wonderful. Yep. Thank you, Steve.
Mm-hmm. All right. Any other questions?
I don't see any in Q&A or chat.
Okay. Now Debbie will continue our training.
All right, thank you very much. That was a lot of good information there. Okay, per MBS Guide, Chapter 17, Part 5, Monthly Reporting Certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. And to navigate to this screen in MGM, you'll click on Tools, click PAEF for Pool Accounting Exception Feedback, then click the Summary tab. And the monthly certification link can be found in the lower right-hand corner, being highlighted with the red box. And if you would, give me a thumbs up if the screen looks familiar to you. Excellent. All right, very good. Now, if my name on the 11702 form is Debbie A. Bowles, and my name on my MGM account is Debbie Bowles, I would not be able to certify, as my names do not match exactly. In order to complete the RFS monthly certification as an issuer, you must be a signer on an active HUD 11702 form in MAMS. Also, the name on the HUD 11702 and the MGM account must match exactly. Like my example before, my name did not match because one form had a middle initial. For a subservicer, the user must be a signer on their internal issuer's HUD 11702 form and must have an active HUD 11707 form in MAMS. And another story here. A few months ago, an issuer missed the 14th business day RFS monthly certification deadline because the only person that had access to complete the certification was out unexpectedly. So therefore, it's a best practice to have multiple backups with an RSA soft token for the RFS monthly reporting certification process. To navigate to this screen from MGM, click on Tools, click PASF for Pool Accounting Single Family, then click the Remittance Advice tab. To report the 11714 certificate, enter the pool ID, the certificate number, and the current reporting period, then click Go. And if you would, give me a thumbs up if you submit the 11714 remittance advice information. Yep, you guys are quick on the draw there. All right. So once you click Go, the remittance advice screen will display. Then you fill out the screen and click the Save button. Once all of your 11714 information is reported, please click on the monthly remittance download in the dark blue bar to export all of the information you reported and save the file for audit purposes. The next couple of slides pertain to SCRA, Service Member Civil Relief Act. SCRA is a federal law which provides legal and financial protection to those who have answered the nation's call to serve. There are specific requirements that military personnel need to meet to be eligible for an interest rate reduction. Ginnie Mae has authorized reimbursement with specific guidelines. To navigate to the SCRA module, click Tools, and under Applications, click SCRA. Issuers must use the module to request eligibility and reimbursement. If you need to process an SCRA, you must have an approved SCRA functional role, LL3. MBS Guide Chapter 34, Special Assistance Programs, has additional information on SCRA along with the required forms you must submit for eligibility and reimbursement. Next, we'll discuss the quarterly custodial account verification reporting in RFS, also known as CAVS. Per MBS Guide Chapter 16, Part 8, issuers are required to submit CAVs between the 6th and 15th business days of March, June, September, and December. CAVs can be submitted in RFS by manual entry or a file upload. A certification must be submitted for each HUD 11709 principal and interest account. And if you would, give me a heart if you have a reminder set for this quarterly CAVs reporting. Oh, awesome. Yep, it can sneak up on you. To navigate to CAVs in MGM, click on Tools, then click on PASF for Pool Accounting Single Family, and click on the Quarterly Verification tab, which is highlighted in the red box. On this screen, you will select the current reporting quarter and click Go. A list of your accounts will appear. Click on the Bank ABA number hyperlink to open the Edit Custodial Account Verification screen. Some of the account information will be pre-populated. update and or add any of the required information, including the agency ratings, and click Save at the bottom of the screen. Repeat for all principal and interest accounts. Now I will hand it back over to Steve.
Thanks, Debbie. We have a few other additional reporting requirements that we're going to cover now. One of the first ones, the first one I'll cover here is WIFIT. WIFIT is widely held fixed investment trust reporting. This is an IRS reporting, not a Ginnie Mae requirement. So that's good to state that at the outset. In 2006, the IRS published temporary and final reporting rules for WIFIT. What Ginnie Mae does is they provide issuers a method to report required WIFIT data to the IRS. We have a standard file layout to report WIFIT, and that can be found in Appendix VI 18. Okay, the link there is at the bottom of the screen. So once you start reporting WIFIT information to RFS, you must continue. So it's not a requirement to submit to Ginnie Mae, but once you begin, you must continue. So data is due quarterly, as shown on the slide here, and that note that the WIFIT is calendar days, not business days. Okay. So issuers have 5 days to make corrections after the 10th calendar day. So due on the 10th, corrections by the 15th. Issuers also have the opportunity at year end to correct 13 months of data, which would be December of one year to December of the other year. So that's your correction window. If you find that something in the first quarter needed correction, you can still report that at year end. Ginnie Mae will publish the data on Ginnie Mae's website under Tax and Factor tab for all of the WIFIT information for the entire year. So Ginnie Mae gets a lot of questions about WIFIT and what's allowable and what's not. Ginnie Mae does not provide the public on specific tax matters. So an issuer, if you have questions, you should consult your own tax advisor regarding the specific tax treatment and tax accounting on any of your mortgage-backed securities. All right, next slide. So once you start reporting WIFIT, the way that you can report that to RFS is through MGM, tools, and the application called WIFIT. Next slide. This is what WIFIT looks like within MGM. You may report manually under the issuer tab here, or you can use the file upload function within MGM and select WIFIT files from the drop-down list. The WIFIT module also provides several feedback reports of the data that you've submitted. Summary information, exception, summary and detailed compliance, as well as a late submission report. And that's it about WIFIT. If we can move on to the next. Another reporting requirement is the annual financials and insurance documents. This is for issuers to perform annually about their company's annual financial documents. Uh, this this guidance can be found in MBS Guide Chapter 3, as well as Appendix VI 20. These documents must be uploaded into the new Ginnie Mae Central or GMC module within RFS or within MGM. Financial documents are due 90 days after the issuer's fiscal year end. And submission of the dates, the submission dates for the annual documents depend on your company's fiscal year end. Bond and insurance, E&O insurance documents are due within 30 days of policy expiration. So those two links, the GMC financials review and the GMC insurance review links are there at the bottom of the page, which will give you additional information about annual financial and insurance documents. All right, next slide. Okay. Under additional reporting requirements, we have some loan reporting scenarios that that come up often enough that we like to bring it up in these trainings. The first one is loan reporting. The first loan reporting scenario is loan substitution, where you have a defective loan and that needs to be replaced within the pool. We'll touch on that. Then how to report modified loans in RFS. And finally, we will touch on the new pool's data quality that comes out when there are new loans in pools. Next slide. Loan substitutions. Now, a loan may be eligible for substitution if it has a qualified defect. What is that? This is an example would be a loan not being insured. The Ginnie Mae buyout group must approve the buyout and the substitution prior to the loan removal. If you figure out that you have a defective loan, you submit a formal letter per appendix VI 02. Okay, the form letter for loan repurchase. Do note that loans are only eligible for substitution within the first 4 months / 120 calendar days from the issue date of the security. So you only have a short window to do loan substitutions. We do have a loan substitution webinar that we've provided at the link at the bottom of this page. All right, that's it on loan substitutions. Let's cover modified loans, reporting for modified loans. Now for a modified loan, issuers report the modified terms on the form 11706 at origination. Those terms roll to RFS in the first month of reporting. So RFS will get that information from your reporting at pooling. Now, we provide this slide to make clarifications about what you should report on modified loans going forward. Issuers should continue to report the first payment date, the loan maturity date, and the interest rate using the modified terms. Those are those fields 7, 8, and 9 on the screen. They relate to the field 2, 3, and 10 in the M2 and M1 GinnyNet layout. All right. By contrast, the issuer must change the modified OPB to the original note OPB. That's that fourth item. So when you report the OPB to RFS, you want to report the modified loan, not the original loan, not the original OPB. The reason for this is that Ginnie Mae receives information from the agency on the original OPB. Okay, and so for loan matching, it's important that you submit that modified value. All right, and then at the bottom there are some guidance for how to report in RFS in that box at the bottom. Do read that. All right, next slide. Now the issuers will receive an e-notification request to verify data reported on MGM SFPDM at origination to make sure that those are correct. So some examples here of new pool data quality, loan to value, combined loan to value, annual MIP for FHA loans, and first time home buyer. So if your system that provides information at origination and your system that provides data to RFS are not in sync, you can have differences in your loan to value, your combined loan to value. Any differences between what's reported at origination and what's reported at in RFS, Ginnie Mae wants to know why you're reporting a difference in those values at first month. So you may receive an email from Ginnie Mae Data Quality if you're reporting something different to RFS than you are at origination. Okay, and finally on that, you'll receive an e-notification on the 8th business day if you have any data quality mismatches, and you'll have to address those. All right, that's it for new pools data quality. Let's move on to our best practices. Now the best practices here, this isn't on this is kind of an umbrella over all of your additional data reporting. These are best practices in general. 100% of pool and loan reported on the second business day. Christy covered that earlier, as well as all E and C level alerts related to pool and loan must be cleared no later than 7 p.m. on the 4th business day. You should have consistency of data reported in RFS. Your internal systems should be in sync. Case number reported on the loan file should match the case number reported at origination. Otherwise, you're going to get a loan mismatch. Issuers are fully responsible for meeting reporting timelines and accuracy of data reported by a subservicer. So just because they're in charge of reporting for you doesn't mean that you can just wipe your hands. It's still your data. You must adhere to your established cutoff date. Any changes for that must be requested to Ginnie Mae for a change in cutoff date. You must ensure your correct liquidation removal reason is reported. It's very important. Analyze and correct RFS exception edits per severity level requirements. And review those e-notifications daily. These are all best practices that will help your job be that much better. Give me a heart if you do at least 6 of these on a regular basis, and a thumbs up if you do all of these. Good. Very good. Very good.
Okay. And Steve, before we move on to the polling questions, I do see that we have a hand raised. So would you like to, oh, never mind, it went away.
Thanks, Christy.
I guess they don't want to ask us a question, Steve.
Maybe we covered it in best practices.
Maybe. And then I did want to also mention, like Debbie mentioned earlier, it is always a good idea to have multiple backups with RSA soft tokens for the monthly certification process.
Excellent. Excellent. Thanks, Josh. I saw your follow-up. All right, let's move on to the polling questions. Okay, let's post our first polling question. Which screen do you use to complete the RFS monthly reporting certification? Is it the PAEF summary screen, the PASF pool activity screen, the WIFIT screen, or the SCRA screen? So think of it, your RFS monthly reporting certification. Let's get all our participants voting. Right or wrong, let's stick our neck out there. All right, let's take a look at our results. All right, very good, very good. 15 votes, and 10 of you are correct. The PAEF summary screen provides your monthly report certification. All right, 2 more polling questions. The next one is, when are your annual financial documents due? This is what I just covered a little bit ago. Is it monthly, quarterly, 6 months after fiscal year end, or 90 days after your fiscal year end? Let's try and get 20 people voting here. Monthly, quarterly, 6 months after fiscal year end, or 90 days after fiscal year end. All right, let's take a look. All right, very good. 90 days after fiscal year end. This was part of our reporting requirement for that. Very good, very good. All right, last one. When does an issuer receive notice on terminated loans? We only give you 3 options here: 3rd business day, 6th business day, or 25th calendar day. Terminated loans. Okay, let's take a look. The correct answer here is the 6th business day, which 70% of you got right. Very good. All right. It's always good to test your brain there and see what you retain. We're going to take a 5-minute break now. And then when we return, Debbie will be presenting. So we'll reconvene at 2:08. Thanks.
All right, welcome back, everybody. We will get started with our next section here, cash and reconciliations. Reconciliations of cash in principal and interest and tax and insurance accounts consist of your bank account statements, your internal servicing records, and the information you reported to Jenny May for your monthly activity, which the totals are on the RFS summary screen in PAEF, Pool Accounting and Exception Feedback. The keys to quality Jenny May monthly reporting are the following: the MBS Guide Chapter 16 for custodial accounts, having Jenny May program knowledge, reconciliations, tests, and internal servicing controls. Cash management includes Jenny May's access to draft funds from your account following Chapter 16 custodial account requirements, funding P&I shortfalls, completing monthly test of expected P&I recons, reconciling mortgage collateral to securities outstanding, which is also known as the pull to security recon, and completing monthly bank account recons. Miscellaneous items would include, but are not limited to, payment clearing and disbursement clearing internal recons. And if you would, give us a thumbs up if you performed the Jenny May bank account recons. All right, quite a few of you. I can relate to you all. Okay, please ensure that there are no restrictions that would impact Jenny May's ability to draft funds from the central principal and interest accounts on draft days, including there are no ACH debit blocks. Issuers should have a procedure in place for communicating with Jenny May and the Bank of New York Mellon, its CPTA, which is Central Paying and Transfer Agent, if any problems arise. This includes the guarantee fee draft. Another best practice is 1 to 2 business days prior to the draft. Ensure the account is fully funded and there are no issues. Confirm funds have been drafted from the account on the day of the scheduled draft. If funds were not drafted, directly contact your bank. Also, provide your Jenny May account executive the plan to remedy the draft failure. And using the thumbs up, let me know if your company has a process to ensure that ACH bank accounts are fully funded on the day of the draft. Oh, great. You guys had no doubt about that. You were quick. Awesome. If your company does not have a process for this, please make sure one is created. Your collections clearing account or payment clearing is an optional account. This account can be used for Jenny May and non-Jenny May funds. This account needs to transfer to Jenny May principal and interest and Jenny May tax and insurance accounts within 1 business day. You may recover corporate advances provided excess funds are restored to the custodial account from this clearing account. Also, this should be a zero balance account, which means you should be able to show detail for every cent that is outstanding in this bank account each day. For liquidations, the clock starts from the post date of deposit on the bank statement. Since issuers do not post payments received after hours until the next day, they have 1 business day from the date of deposit posting. Ultimately, the funds must be deposited into the Ginnie Mae principal and interest account within 2 business days of receiving the funds. And thank you all. I will now turn this over to Christy.
Thanks so much, Debbie. That was a lot of wonderful information. So here are the principal and interest custodial bank account requirements. This account can be Ginnie Mae funds only. It must be a single non-interest bearing custodial account. It may contain funds for more than one pool. A HUD 11709 form must exist for each account, which is part of the master agreements. Please ensure that the bank account title on the bank signature card and the HUD 11709 are correct. Please see MBS Guide Chapter 16 for acceptable acronyms for the bank account titles. The P&I bank account must be maintained at an ACH capable institution, capable financial institution. The bank recons must be completed timely, which is within 30 days of your Ginnie Mae cutoff date. And it must meet the CAVS bank rating requirements. Give me a heart if you manage these bank accounts. Wonderful. Seeing some hearts. That is excellent. If you have a principal and interest disbursement account, here are the requirements. You may use a separate disbursement account. It must be non-interest bearing and a zero balance account. It must be maintained at an ACH capable financial institution. It must only contain Ginnie Mae funds, so no commingling is allowed. It can be only for Ginnie Mae 1 before a Ginnie Mae one Ginnie Mae issuer ID per account. And a master agreement HUD 11709 form must exist for this account. Please see Chapter 16 for acceptable acronyms for the bank account titles to ensure the titles for this bank account is correct. Principal and interest accounts are subject to custodial account verification, also known as CAVS. It is required when the total FIC, which are the P&I payments, are equal to or greater than $100,000 in any month per Appendix 619. Also, single-family issuers are not required to report escrow accounts in CAVS reporting. Per the agency rating requirements, institutions are required to meet at least one of the following. Institutions serving as funds custodian with assets of $30 billion or more must have either a short-term rating by S&P of A3 or better, a long-term by S&P of BBB or better, short-term deposit ratings by Moody's of P3 or better, or a long-term deposit rating by Moody's of Baa3 or better. 30 billion or less asset institutions must have an IDC rating of 125 or better, or a KFI score of C+ or better. And now for the tax and insurance custodial bank requirements. This account may be interest-bearing. It does not have to earn interest, but it may. This account must only contain Ginnie Mae funds. It must have a HUD 11720 form for each account in the master agreements. Please ensure that the bank account title names on the bank signature cards and the HUD 11720s are correct. Please see MBS Guide Chapter 16 for acceptable acronyms for the bank account titles. Just like the principal and interest accounts, the tax and insurance bank accounts must be, bank recons must be completed timely, which is within 30 days of the issuer's cutoff. Issuer must have a separate escrow account for FHA 203K funds and separate escrow accounts for any FHA, VA, RD, USDA, or PIH requirements. Also ensure monthly FHA MIP payments are processed for the full amount due to FHA in a timely fashion per agency requirements. Principal and interest temporary shortfalls may be caused by mortgagor late payments or NSF checks from borrowers, or incorrect advance calculations, just to name a few. Here are the few non-recoverable corporate advance payment shortfalls, including but not limited to adjustments, loan removals, and tax and insurance shortfalls. The loan payoff shortfalls for FHA loans must be may be the difference in the liquidation interest paid by the borrower and the remaining interest due through the end of the month that needs to be funded to your principal and interest account. Any shortfalls for Ginnie Mae 1 pools are due to the custodial account prior to the 15th calendar day. For Ginnie Mae 2 pools, any shortfalls are due to the custodial account prior to the 19th or 20th calendar day, depending on the ACH draft for the Ginnie Mae 2 pools. Companies can use corporate advances, which are issuer funds, excess funds, which are unscheduled recoveries of principal on the pools, which can be found in MBS Guide Chapter 15, Part 5, or the Pool Advance Agreement, which uses bank funds. Also, Appendix 6-1 must be completed. I will now turn it over to Melanie.
Thank you, Christy. Okay, so using the thumbs up, please let me know if you review your test of expected P&I. If you review your test of expected P&I, give me a thumbs up, please. Great. Great. Okay, well, great. Thank you for the thumbs. Test of expected P&I provides the P&I account minimum dollar amount on all pool cash shortages funded by the issuer. It is required on every pool and performed monthly by the issuer. When performing test of expected P&I, you may not net pools that have cash overages with pools that have cash shortages. A best practice would be to fund your P&I account for any positive differences in one transaction, then withdraw funds from your P&I account for any negative differences in a separate transaction. For audit purposes, you should retain the pool level documentation for these transactions. Okay, and here is a test of expected P&I recon. Most servicing systems will complete a similar test of expected P&I recon report like the one displayed here. Please note, the test of expected calculation is only accurate when the pool to security recon is 0. Let's see, using the thumbs up, please let me know if you review your recon of mortgage collateral to securities outstanding, also known as pool to security recon. Great. Great. Okay, thank you for the thumbs. The pool to security recon is required on every pool and performed by the issuer or by your servicing system. If your pool is over collateralized, the adjusted pool principal balance is larger than the securities balance, and you'll need to recover unscheduled principal from liquidations or curtailments. There is a tolerance of up to $100 per pool if there are no unscheduled recoveries of principal. Now, if your pool is under collateralized, this means the adjusted pool principal balance is less than the securities balance, and you need to remit principal, most likely by a corporate advance. And there is a tolerance of $1 per loan per pool with a maximum tolerance of $50 per pool. Okay, and here is a pool to security recon. Most servicing systems will complete a similar pool to security recon report like the one displayed here. Okay, now here's a sample format of a P&I account recon. Most issuers build their own P&I recon form in Excel. Your bank recons must be completed within 30 days of the issuer's monthly reporting cutoff date. The cash flow method is taking the balance at the end of the previous reporting month plus daily deposits minus disbursements. This total should equal the ending P&I cash book balance. This balance is reported on field 12 of the pool record and is also displayed at the bottom of the pool screen. An important note, all adjusting items on the recon must be resolved within one of the next 2 reporting cycles. So if you have outstanding unreconciled items, it may result in an audit finding. Okay, and here's a sample format of T&I account recon. Like P&I recon, most issuers just build the form in Excel. And just like the P&I recon, the T&I bank account recon must be completed within 30 days of the issuer's monthly reporting cutoff date. T&I funds must be deposited in a Ginnie Mae escrow account within 2 business days, which is 48 hours of pool settlement. In field 29 of the loan record, the escrow balance for individual loans is reported. Field 11 of the pool record should reflect the total escrow of all loans within the pool. A common field review finding is differences in excess of $1 have been identified between the adjusted bank balance and the total funds other than escrow per the exception feedback summary screen. So an important note, if you have adjusting items on your recon, they must be completely resolved within one of the next 2 reporting cycles. I will now turn it over to Christy.
Thank you so much, Melanie. That was a lot of fantastic information. So the large red box on the pool activity screen shows where all of the bank account balances are reported on the pool level. These balances can be reported on the RFS file or entered manually online in MGM. The Save and Summarize Pool button at the bottom of the screen in the red box needs to be clicked when any information on the screen is updated, or if any loan level fields are updated, as certain loan level information is moved to the pool screen behind the scenes. Also, if you click the small plus sign in the bottom left-hand corner, the custodial bank information is displayed. This is where you would update the bank account numbers and the ABA numbers. Ensure you click the Save and Summarize button if you have made any updates on this screen. Okay. Please give me a heart if you use the funds reported in these red boxes on the PAEF Pool Accounting Exception Feedback screen in your bank recon. Okay, wonderful, seeing some thumbs and hearts, but you know, I get it. That's wonderful. Thank you so much. The tax and insurance funds are a roll-up of all of the tax and insurance balances. And the other funds is a roll-up of all of the principal and interest and other funds balance, which is on the pool screen. Okay. Issuers are required to generate and maintain all 11710A and 11710E information each month. Issuers may generate a facsimile, which is a copy, of the form as long as the form includes all required and accurate information from their servicing system, or a manually created internal form for audit purposes. The actual HUD 11710A and HUD 11710E forms on ginniemay.gov have a watermark for reference purposes only. And these forms are not updated anymore with an expiration date. Appendix 6-04 is the issuer's monthly accounting report. It provides general information such as a definition of the CD or IR pool, interest rate spread, and payment information. It describes every field requirement and calculation of interest, gross and net, the pool service fee calculation, guarantee fee calculation, and instructions on how to complete a liquidation of HUD 11710E. Please ensure that the HUD 11708 form can be provided to an auditor for each loan that is liquidated from a pool. Okay. Let's post our next polling question, please. Brandon, that is not the question that we have here on the screen. Do we have this question as one of our polling questions, or I guess that one was our next question for the calves.
For some reason, I do not have this question on my polls.
Okay. Well, that's fine. We can just talk through it. No problem. So our question is, what is the time limit to complete the bank reconciliation? So give me a thumbs up if the answer is 30 days from cutoff. Give me a heart if it is A or C. Okay, so yeah, we've got thumbs, so yes. So it is very important that your bank reconciliations are dated within 30 days of the issuer's cutoff. So if you have a month-end cutoff and you've got 31 days the following month, you should not have the 31st as your date on your bank P&I and T&I recons for Ginnie Mae. Okay, so now Brandon, can you post our next question here, please?
Yes, give me 1 second. Something happened to my polls and quizzes section.
Oh. Maybe Zoom thinks it's Friday. You know, it's ready for a break, right? Yes. I guess technically it's Friday Eve, right? Since it's Thursday. That's okay, Brandon. We can just walk through it. So when is an issuer required to submit custodial account verifications? So how about, let's just walk through them individually. If you think it's every month, give me a thumbs up. Oh no, I see a thumb. So CAVS is actually a quarterly thing, so it is not submitted every month. So, okay, so the next option is B, when the bank account has $2.4 million in deposits. Give me a thumbs up if you think that one is correct. Oh, yay. I'm not seeing any thumbs. Okay, so the last option is when the FIC equals $100,000 or more. So give me a thumbs up if you think that one is correct. Yay, there we go. Lots of thumbs. Yes, that one is correct. So CAVS is required for the principal and interest account when the FIC equals $100,000 or more in any month per Appendix 619. Okay, so I will now turn it over to Sylvia for our survey.
Thank you so much to our team of SMEs, Steve, Melanie, and Debbie. You guys did a great job, and we really hope that the folks on the call also found the information that was shared valuable and informative. So as usual, we're going to ask that you please give us feedback so that we can take your comments and improve our delivery and our content for future trading. So Brandon's going to post a poll, a survey. If you minimize it, you can actually go back to it by navigating to polls and quizzes on your bottom Zoom bar. So while he's loading that, I'm just letting you guys know that we'll be having a time of questions, and there's a couple of ways to be able to ask questions. If you raise your hand, we'll unmute you and you can speak. Or same thing for if you've dialed in by your phone, you can press *9, or you can also use the Q&A box. And Brandon, just checking, did you launch the poll, the survey?
I cannot access my polls and quizzes right now.
Okay, guess everybody doesn't get to give me feedback, but if you have any particular topics you want covered, or if there's something you want to share with us, you can feel free to do it in using the Q&A that has an anonymous feature as well. So we, as usual, we do appreciate your feedback in whichever form that it comes in. Okay, any questions from folks that attended this training? And again, it could be questions on today's content or any of the content that preceded today. Any questions? Are you seeing any hands up, Brandon?
Nope, no hands.
Okay. I'm also not seeing anything in the Q&A. And as I said, you feel free to give us your feedback anonymously in the Q&A if there's something burning that you want to share with us. That's not a problem either. All right, I do want to be respectful of your time, and a lot of folks have actually had 3 days of training, so I understand that there's probably a lot of work piling up. So if there aren't any questions, we'll close the call at this point. And again, thank you for your participation and for joining us for these 3 days. And we will, any future trainings, we hope that you'll subscribe to the announcements so that you'll be aware of anything we do coming up in the near future. Again, thank you so much. And thank you to the SMEs. Appreciate your sharing this important information. Thank you. You can stop recording, Brandon.